Hello, everybody. My name's Tony Cardenas, and this is the Indy Real Estate Market Weekly Update. Today, I'm sitting here with Shelly Walters with EXP, Carmel, Indiana. Kyle Morris with FC Tucker, Carmel, Indiana, also known as AKA Big Daddy.
That's right.
Anyway, hey, let's talk about the real estate market, but let's start it off right here. Interest rates are down a little bit. So if you're looking at banks compared to lenders, compared to brokers, you better get to the brokers. I'm telling you, the rates are better. They don't have all the overlays. You got 6.99% out there. Some of them could probably even squeeze it out at 6.75%, subject to where you're at. And your loan to value and your credit score. Those are the top tiers, okay? So we're going to have a list of the mortgage brokers in the next show, okay? And I'm starting a new show on Thursdays called Money Talk, and it's all about interest rates, loan to values, and those type of things so people can understand it and get acquainted with FHA, VA, fixed rates, jumbos, non-QMs. But in our market, it's not like everywhere else in the United States, is it, Shelly? I think our market's pretty good.
We are doing wonderful, and it's the same. Kyle and I ran numbers from 2019 and then compared it to 2021 and compared it to this week of 2022.
Talk about that.
So, Kyle, go ahead and give yours. It's very interesting.
So, I'll just talk about it in broad strokes, right? Before we get into the numbers specifically, but compared to last year. So last year there was more closings. But it was actually a higher days on market than it currently is, right? But if you look back all the way back to 2019, so I think it really just gets into what is this market historically, because I think a lot of people are looking at it like, oh, this is a bad market, et cetera, et cetera, et cetera. But they're only using the past 2 years as a reference point. They're not looking at broader, historical data.
Exactly.
We are pretty similar to 2019, and we are even lower. 2019 had higher days on market than even 2021 did.
Right.
And if you would remove 2020 and 2021 statistically, 2019 was our best market ever up until those 2 years, right? It just kept getting better and better and better. But 2019, you had people who didn't want to buy. Interest rates were high. Inventory was low. They thought it was an inflated market. And then, the past 2 years. So it's really interesting when you look at it and people are concerned about the current market. I mean, obviously, interest rates go into that, but, we just had midterms. What happens with all that? This isn't a political discussion by no means, but historically, that stuff matters as well. We're just not in the market that people think we are in. We're just not.
Right.
I mean, as far as it's not people think it's doom and gloom, and it's it's a really good market
but it's
historically.
Not like L.A. It's not like Washington, D.C. It's not
Correct.
like Atlanta, Georgia. Our market, we're Midwest. Our days on market, Shelly, days on market. Just give this to me before we go through this. Days on market for Carmel, Indiana. How many days on market are we at?
In today's world, the past 30 days on the sales, 19 days on market.
That is fantastic.
Yeah.
That's great.
Shelly, let me ask you this, Kyle. What was it 4 years ago? Some of these houses were out there 60 days or longer. Am I correct?
Oh, absolutely. Absolutely.
Well, that's what Kyle and I ran. So we were looking at, so if I look at Carmel specifically in 2019, this week in 2019 compared to this week, 2022, 33 houses sold in 2019, 98% list to sale ratio, 36 days on market. Compared to that to this week, 2022, it was 19 days on market compared to 33 days on market, 99% list to sale ratio versus 98% list to sale ratio. And then there were 131 that sold in these past 30 days. So this is a good market. Unfortunately, we've got a lot of news out there talking about the entire United States and markets.
Right now, we only care about Indianapolis, Indiana metro markets.
Yeah. So the difference between a days on market between 2022 and 2019 is lower and by half, and the list to sale ratio is higher. And so I did it for Westfield and I did it for Zionsville. He did it for Fishers. He did it for Noblesville. Everything was better than 2019.
Yeah. And I mean, we're just on a micro level, we're just impacted less by the ebbs and flows of it. I think the thing that people really notice the most here locally tends to be house value, and that has gone up significantly, but that has more to do with the fact that we were historically underpriced here than anything else. I just think that we've gotten to where prices should be here locally. I don't see that coming down. I mean, we're coming down a little bit, but that's due to an inventory problem, not necessarily that we were underpriced,
But
right?
we also look at that if you're talking about in the past 2 years, it's been 20% year over year.
Yeah.
The prices went up on value. So if we are looking at the past 30 days in Carmel, Westfield, and Zionsville, for me, we're at 100% average list to sale ratio. That means they're still getting those 20% times 2 values for that home. So their house has not decreased in value. It is staying the same. It's just not continually raising
Like it was.
10
Like
to
it was.
20%. I mean, it just can't keep doing that. But it's not like when we put the houses on the market, we're getting, 90% list to sale ratio. We're still getting the value of the house.
Yeah. So in Fishers, I had 24 that actually closed in the past week. 15 of those were at or over list, and 6 of them were within $10,000 of list. So, like going back to the 20% year over year. So, if you're looking at a $600,000 house and it sold for $590, did you miss the market? When you
Yeah.
had 20% year over year, you know what I mean. So it's like
Well,
we
in
get
your
too
mind-
focused on
in your
this.
mind, you missed the market because but theoretically and by the numbers, you didn't miss the market. But I
Correct.
understand what you're saying.
Correct.
But Shelly, recap that those Carmel numbers for me one more time.
Are you talking about compared to the 2019 or
No,
just
just
this
give me,
week's?
Carmel
Yeah, so
numbers for
this
today.
week, past 7 days, we had 25 listed. 8 of those pended. Currently have 153 on the market between 190 to 5.9 million. 16 homes are over 1 million currently on the market. The days on market average pended 26 in this past 7 days. So we're looking at the past 7 days. Average day on market for Carmel's 26.
Okay, let's go to since we're in
So Westfield is
Westfield.
25 were listed in the past 7 days. 3 of those pended. Currently 195. That's about the highest I've seen in inventory in the past couple
what's
of
for
years.
sale in Westfield.
Yeah,
Okay.
anywhere from 225 to 3.25 million. There's 24 over 1 million on the market in Westfield. I think that's pretty high for Westfield.
Yeah.
In regards to their standard market, they're getting a lot of those $1 million homes on the market. Average days on market of those 7 days, past 7 days, was 50 in Westfield. And then in the solds for the past 30 days in Westfield, 109 have sold. List to sale ratio was 101% and 26 days on market. So if we're looking at the past 30 days average, 26 days on market, and this past 7 days to 50, we are seeing an uptick in days on market in Westfield. We did in Carmel, it went from 19 to 26. So we are seeing those continue up. But again, let's talk about the season. It's
Yeah.
Thanksgiving is coming up.
Absolutely. I mean, it's
Christmas is
holiday
coming
season.
up. So this is not a doom and gloom. Days on market are going up. We're into a seasonal issue as well. And here in the Indianapolis market, in Zionsville, we had 8 listed, 1 pended. Currently 47 on the market between 295 and 7.5 million. The average days on market for the last 7 days was 28.
Wow, that's
Yeah, we're doing fine. Solds in the past 30 days in Zionsville, there was 34 that sold. Average days on market was 15. List to sale ratio 99%. None of those numbers are bad at all.
not at all. A matter of those are really good numbers.
They're great
and a lot of
numbers.
cities wish they had these numbers.
Right, and just patience on the seller side. We talked about this earlier too before we started about the expectations set for your sellers. When you're sitting down with your sellers, you just have to let them understand the market, understand your numbers, and know the numbers, and not to listen to what they want or think or feel should be happening. Tell them what you know is happening.
Right. Like I think
Exactly.
we need to get back to, if somebody's thinking about buying or selling, like it needs to be back to like a 6-month process, like it's kind of historically been, instead of like, hey, I want to move in the next, 60 days. Like you're always going to have those people because of relocation or health or family situation or whatever, mom gets sick, whatever, and something happens. But, when we go and talk to people, it's been like this for the past 60 days. It's more about setting the timeline expectation of like how this plays out, and so none of ours are really
Well, it's
concerned.
funny you said this because let me tell you something. On Housing Wire's front page, don't expect a drop in home prices in 2023. NAR economists say expect to see an increase of 1%, which is really good compared to what the doom and gloom everybody else is saying in
Right.
the United States. And the national median home price next year, okay, that's Lawrence Young. He's a big writer. He knows what he's talking about in the real estate business. So kind of what they're talking about is kind of like what we're starting to live a little bit, which
Yeah.
is actually really, really good if you're a buyer or you're a seller.
Because we still have an inventory problem.
Absolutely. Okay. So let's go over your numbers. What do you got for us?
So in Fishers, 25 went on the market in the past week, anywhere from 200 to 2.2. The 2.2 was just east of the North Causeway over on Geisses. Actually, I spent some time looking at it this morning. It's a beautiful property.
What were you doing, a drive-by?
No, I was just looking at the photos just because it was close to my house,
Okay,
and
gotcha.
I was it was an agent in my office as well, so I just had some extra curiosity. So, 23 of them are still on the market, so only 2 pended, right? Within a week.
What's the days on
But the
market?
actual, so hold on a second. So, but 22 pended last week. It's just that they had been on the market longer than 7 days, right? Average days on market in Fishers right now is 32, with 163 total on the market. Of the 20, here's an interesting thing though. So like of the 22 that did pend, 9 of them were under 10 days.
Wow.
It's just they weren't under 7 days, right? So I mean, we're really just kind of getting more and more into the data. You know, like I said, there was 24 actually closed this week, 15 at over list price, 6 within $10,000 of it, with an average of like 20 days on market for the closings. But when you look at those numbers at 20 days on market for the ones that closed, I did remove an outlier there because everything was pretty similar, but there was one that had been on the market like 911 days. You know, I mean, that was a huge outlier, like raised it up to like 57. I was like, this is different, you know? So, but for Fishers in 2021, we had 51 closed this week. With an average of 27 days on market. And in 2019, we had 29 closed with an average of 27 days on market. So it's all been very, very similar. In Noblesville, we had 18 go on the market from anywhere from 85,000 to 850,000. 16 of them are still active, so only 2 pended. That went on within a week again.
What was the low price in Noblesville?
85.
85.
850.
850.
850. Yeah. So, but 12 of them actually pended last week, right? So there's 35 days on market. You've got 137 actual as far as active inventory on the market. 25 closed for an average of 23 days on market. 14 of those 25 that closed were at or over list in Noblesville.
Well, Shelly and I used to were talking in the beginning of this year about how good Noblesville is to buy a home, lower pricing, great schools.
Yeah.
And I said, you know,
And it's getting built
down here in
out
Carmel,
really, really well.
You can't get that, but up in Noblesville, you can. It's a really good price up there. And I remember we were talking about some buyers this spring, and I said, Shelly, where can they go? And she goes, you know, there's a great opportunity up there in Noblesville, and it is a good opportunity.
And it's just going to get better because they're doing all the development on the river now.
Exactly.
Yep.
Hey, Justin Griffith's not on the show this week. He's out taking care of some customers today, but we are going to have his stats this Thursday. I'll have the stats on Meridian Kessler, Broad Ripple, Fletcher Place, and a couple of his other areas down there. But we'll have that in the rates. But, Shelly, I want to go to something that you were talking about earlier, you and Kyle, before the show. We were talking about sellers worrying about selling their home, how long it was taking. Can we kind of go through that?
You know, some of the things we've already said today, but the point is we are looking, when we're looking at these numbers for the past 7 days, we're trying to really figure out where we're moving into.
Right.
You know, we're not looking at 60 days ago, we're not looking at 90 days ago. And so for us to continually to watch this, when we sat down with our sellers, they're hearing one thing. And Kyle and I are both very much on the same page that when we're sitting down and talking to our sellers, we're telling them exactly what we know and what we feel needs to be told to them. We are not going to sugarcoat it. We were talking about, you know, there's some verbiage of buying a listing or whatever.
Right.
I am not in the business to just listen to my sellers tell me what they think is going on and tell me what they need to price their house at, when they want to do it, and then I'll just say, okay, here, sign the paperwork. I'll throw the sign in the
You're
yard.
just not a person out there listing houses to get something on the board.
Yeah, no, I will sit down and, you know, sometimes I'm pretty blunt, but I do want to tell them exactly what I know, what I'm watching, what I'm seeing.
Right.
You know, when you're selling close to 100 houses a year, you are in this knee deep and you see it every day. What they're seeing on the news, what their friends are telling them, what their neighbors are telling them is getting in one ear. And I want to try and sit down with them and say, here, and I want to show them the numbers. As we look at, we didn't talk about Westfield and Zionsville, but
Right.
2022 in Westfield, 17 houses sold in this week in 2022. In 2019, 30 sold, but the list to sale ratio was same, and days on market was 18 to 35. That's the same in Zionsville. 2022, 26 days on market. 2019 was 41 days on market. So Kyle, you said something that was really good. It's like, if we bypass this past 2-year craziness and get back to the last so-called normal market or different market than what we've looked at, we are still doing very, very well, but it is extremely important to sit down with your sellers and tell them what you know and what they need to know. If it's not a proper time for them to sell for many reasons, then don't sell. Don't list it. But
because the market's not going anywhere,
Right.
No.
right? You're still going to do fine on it just because of where we are in the market. And back to the media piece, I get why it's there. It's just on a broader scale, right?
It's
So
a recap of everything that's going on in the United States.
Right.
They need to listen to this show so they can get the stats here.
So that's what Shelly and I do when we go in, and she's saying, like, I'm blunt with them. Like, we're blunt in the sense of, like, I'm educating you in a sense that what you are hearing is not entirely accurate or a good explanation of what's going on here. Like, I have the facts to back up. I have the data points, all of these things. Now, some of what they're saying is accurate. Some of it isn't. I don't know about you guys, but I've heard a lot about, like, well, foreclosures are going to be happening and blah, blah, blah. That doesn't have anything to do with the housing market. That has to do with what your credit exposure looks like. Are you like that? That has nothing to do with the housing market in particular. And people are
unless we start getting 20 to 30% of the houses on the market are in foreclosure,
that's
we're not going there. I don't see that happening.
I don't
that
see
was
that happening
2008. That's a whole.
And then they had the Dodd-Frank Act, that all these things that changed
we don't need to get
yeah. It's super. No, but I'm just saying, like, loans are stronger these days. People are more qualified, et cetera, et cetera, et cetera.
Something that I want to bring up to you today, because if you go get. Now, here's something that you guys haven't heard in the last few weeks, and I just did this, okay, looking at different vendors around the United States for banks versus lenders versus brokers. There are brokers out there on a 2-1 buy down that you can actually get 4.5% today. Now, it could change 5 minutes after the show, or it could change tomorrow. You get 4.5% your first year, okay, on a $400,000 home. Excuse me, a $500,000 home, $400,000 loan amount, 80% loan to value, 760 credit score. You could get 4.5% today, 5.5% the second year, okay, with an end rate of 6.5% if you were to lock down with a broker.
Yep.
Not a banker, not a lender. There's too many overlay fees. Brokers have less overlays, okay? And what that does, it saves somebody $501.53 for the first for every month for the first 12 months. And then the next year, it saves them $257.11. And it only costs the seller $9,103.68. You could actually get somebody at 4.5% today if you had to close a deal and make a deal work.
Well, and so, I've gotten some feedback, we need to explain like a 2-1. And honestly, I think for something like that, they need to call you in particular to just walk through, because there's so much specifics that can go into it.
I've got I got 3 different loan officers I can set them up with, so they can actually break this out to their exact situation.
Correct. The broad strokes of it are, it's a fixed rate loan. It's a loan product that the first 2 years.
It's a fixed rate with a buy down.
Correct.
Fixed rate at 6.5% is what you have to qualify in this particular case scenario. Okay, but the first year you get 4.5%. The second year you get 5.5%. The seller pays $9,103.68 on a $400,000 loan amount with a FICO score of 760. Okay, at a qualifying rate at 6.5%. I'm talking about deep discount brokers.
Right.
Okay, some of these guys can do it. There's no tricks in the bag.
Right. And then the remaining 28 years, it's the same rate,
here's
right?
What's going to happen.
People refi, all
Absolutely.
that stuff.
They're going to be 6.5%. What are the people going to do? They're going to end up refinancing to a 20 if they're smart, move forward, maybe to a 25. There's a lot of companies out there do 25-year loans and to talk about these kind of things. But there's no trick in the bag right here. It is self-explanatory that $9,103.68 moves with the mortgage note when they close the deal and goes to the lender, because that interest is paid out with each payment.
It makes your loan more affordable on a month-to-month basis for the first 2 years.
24 months.
And it's really for people who are concerned about the current
Right.
rates,
I mean,
and people who think that they are going to go down, et cetera, right? And so it makes it more affordable.
We were talking
for people
about,
on the front
again,
end.
with your sellers, talking to them and giving them the expectation that you may be doing or requested to do this.
Well,
so we have an issue
right,
with
Shelly.
you can't open this up like in the beginning and say, you know what, offer so much money. I mean, it's per buyer, what they qualify for, what their loan is going to be, who the company is.
If the guy has a lower credit score, he's going to get a higher rate. If he has a better score, he's not going to get a better rate than that. But let me explain something. This rate could change. This is a bare bones minimum through some brokers here in Indiana. Okay. The bottom line is this. You got ARMs. You got adjustable rate ARMs. They're okay, but they're not as aggressive as this. Okay. You got just a straight fixed rate. Okay. Depends how creative you want to get with your mortgage. But understand this. If you're buying a home, okay, hey, if the rates come down to XYZ, will I refinance my home again? Yes, I will. But it's got to make sense for me to do it.
Right.
Okay. They're going to roll in the closing costs. They're going to give me a credit on the closing cost. Okay. So it's an in and out for me. You get to a broker and just a mortgage lender. These guys can do that stuff. Banks don't do it. Everybody thinks, oh, the bank's the best. Let me tell you something. They're the highest people out there. Credit unions are good. They're not as good as the brokers. The brokers have got it because the only thing the broker does is sell mortgages. They're not selling checking accounts, savings accounts. They're not doing investments. Okay. Probably because they don't know how to figure it out. Okay. And they're not smart enough. But the bottom line is some of these guys are very, very smart when it comes to mortgages.
Yeah.
Okay. And I'm going to rattle off some names next show. And that starts with Money Talks, which will help people buy homes. That is the bottom line.
Yeah, financial literacy, right?
Exactly.
Mm-hmm.
Well, and just again, for the sellers need to know that there's options out there for them to help buyers. Buyers need to understand that there's options they can ask for seller help and know that there's not just this standard, look at the house, make an offer. And then what it gets down to as well is your agent needs to understand this change. It's not like it was, and understand what you can help your sellers to understand and your buyers to understand.
You're right, Shelly, but I got to tell you something. A lot of agents, I talked to 5 agents last week because I do a lot of marketing, okay? I talked to 5 agents and not one of them could tell me how to 2-1 buy down. And they were told by other companies how it works, and they were totally confused. And I said, no, that's not the way it works. There's only one way it works, okay? And that's exactly the way I just said. Okay, there's no other tricks to it.
The
seller can pay the $9,103.68 on this example, or the real estate company. The mortgage company cannot do it, and the buyer can't do it. They cannot say, hey, I'll fund it myself. No way. You can't even refinance doing this because the mortgage companies know what's going to happen if the rates go down.
Yeah.
It's a loser for them.
Yeah.
Well, I just want to say that you make sure when you're hiring your agent, buyer or seller, that you ask them what their timeline is and when they've sold houses, how many houses they've sold, and over time in the past 12 months.
You're right.
Because you really, really need an agent who has been through, we've talked about this, I've been in 4 shifting markets since I've been in business, and I know Kyle's been in them as well. We have been through these markets. We know what to do, and we're paying attention today what we need to do for our buyers and sellers in this exact market.
But you have to hire an agent. If you're going to live in Bloomington, Indiana, okay, you either have to have a connection down there to list a home. You've sold homes in Bloomington, Indiana. I know you have, and Columbus. But here's my point. When you're hiring a real estate agent up here in Carmel or Indianapolis Metro, somebody could say, yeah, I can list a home in Meridian Kessler. Man, you need to know what's going on. And both of you guys sell homes up there. You sell all over Hamilton County. You sell in Avon. You got to have an agent knows what the heck they're doing.
Because every market's totally different. That's why when we
Absolutely.
break down these stats, he's doing towns and I'm doing towns because they are different. I mean, I look at Zionsville consistently. That market is totally different from Carmel and Westfield.
Right.
And if you don't know your echo market, your different markets, and understand
Right.
what you need to
Ooh, I
do
like
for that buyer and seller. But I just think I just get down to understanding that the agents are all different. Agents have been through different things. You really, really in this market, if we're sitting and talking to our sellers about what's going on, is you just need a very experienced market agent right now in this market because of money that can be lost.
Yeah, because I mean, if you're on the market 17 days right now and you're panicking, you went into it with the wrong expectation in the first place. Or like something we haven't talked about too much is showings, right? Okay,
yeah.
so like let's say we know how long it's taking to sell a house on average right now. But what we haven't been talking about is how many showings it takes to get to that, which is obviously very dependent on neighborhood.
Door and buy it like 8 months ago.
It's just less, but historically, like, it's seasonal. Back to Shelly's point, you just don't have as many showings. It doesn't mean the house doesn't sell. It'll still sell. It's just not necessarily the end all be all barometer of whether your house is going to sell or not, right? With how many people are coming in, because we've talked previously about the previous 2 years had a lot of a disproportionate amount of elective buyers, right?
Yep,
and
right.
so they're out more because they're just kind of kicking the tires and they're like, oh, we like this, let's do it because we can, because rates, blah, 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 blah. Well, that's not what the market is usually like, specifically in the wintertime for us, but even historically outside of that, it's just, the elective buyers, a much smaller percentage of the marketplace. And if you don't know that and you don't know what it's supposed to look like, you would freak out if you don't have enough showings or anything like that.
Well, we were talking
right?
about 60 and 70 showings per listing before. Now we're talking
In like
about,
a day and a half.
Yeah, and we're talking about maybe 3 and 4 in 2 weeks or 4 weeks.
And you're like, what's wrong? Like,
Yeah,
it's
but
fine.
it takes one buyer. We always say it only takes one buyer, and you need to be prepared for that one buyer. But we are in the holiday season, and if somebody's looking at houses right now, they are serious.
They're committed buyers. Yes.
And you want these serious buyers. So, talking about whether or not who's coming in your house, there's no tire clickers right now. Not
No.
in this next 6 weeks.
Okay, hey, the show's a little over on our time, but I want to end it on this. Okay, if somebody needs some advice on buying a home, reach out to Kyle Morris. How do they get a hold of you?
It's Morris Property Group with FC Tucker. It's 317-649-5122.
Shelly, how do they get a hold of you if they want to tell you that they want you to drive down to their house and list their home in Meridian, Kessler, or Carmel? I'm telling you, you're going to sell my home.
Okay, so Kyle and I can do both buyers and sellers, and anytime they can give us a call. My phone is 317-201-2601, Shelly Walters Realty Group with EXP.
Okay, everybody, thank you, and we will talk to you later this week on Money Talks.
Holly here, and thank you for listening to this week's podcast. Next week, we are talking about new home construction, actual inventory for sale, and almost ready to move in. Want to contact one of our professional real estate agents on our weekly podcast? Call 317-480-4115. Thank you to Kyle Morris with FC Tucker, Shelly Walters with eXp Realty, Justin Griffith with Keller Williams, and Greg Cooper with Compass Real Estate. This podcast has been sponsored by Executive Portfolio Magazine. Go to www.executiveportfolio.com to see this month's digital magazine.